aka Nature. Alright, for another video, let's get right into it. So in the last video we was talking about trading and knowing when price is going to pull back, and we was talking about when price pulls back, that's when you want to get in, when price pulls back. Or you can get in and you can be an aggressive trader and you can just get right in as soon as you see price tremendously fall through a support or resistance level. Okay, so in this lesson we're going to explain more about that with so you can identify the trend line and you can know when to get in. I'm going to be explaining more on top of what we just was talking about. All right, so how to identify the trend and what direction is going in. So if price moves in your chosen direction, you will make a profit. But if price moves against your chosen direction, then you will lose a profit. Okay, so that's how it goes. All right, so we're going to talk about, this is support right here. This is support. This is support. Okay, and it's resistance, resistance, resistance. So basically what this means is the support is the lowest point it went to before it went to the highest point. Now when it goes to the highest point, that is now called the resistance. Same thing back here. Support, again, the lowest point it went to before going back to the highest point. That's now the next support level, next resistance level. Same thing here. Support goes back down to the next support level before the lowest point it can go to, and then it goes back to the highest point it can go to. That is called resistance, and then obviously it goes back down on a downtrend. Okay, let's get into it. So resistance. So if you see price pass through, it'll either do this. Price will pass through, it will break through, right? It will make a breakout to the resistance, right? It will go to the top, it'll make a breakout to the top, to the last resistance that it was at, right? And then it'll test, it will bounce back, it'll always pull back and test. It'll always test back. It'll always pull back and test back to that last support before going back up to that next resistance. Okay, so this is how you test it. Resistance, as far as like if it's an uptrend, identifying the uptrend, you want to wait for a breakout. You want it to break out of that support level and go up, right? And then you want it to go back down. You want it to pull back down. Wait for it to test back down. Once it tests back down, then you go back up. All right, and that's how you identify. That's how you trade. Okay, on that. Okay, wait for the pullback. Same thing on the reversal. So let's reverse it here. Okay, so if you're going down, if this is a downtrend and you're trying to look for sales going down, you will wait for a breakout, some type of breakout going down, right? And then it will test back up. You have to wait for the pullback up before it goes back down in that direction. Okay, so it will break through the support level, right? It will break down through the on the downside. It will break down on the downside through the support level, and then it will test that level again, or it will go to that next resistance level before breaking back down. Before this becomes your new resistance. Every time this becomes your new support, this becomes your new resistance every time. And then once it comes back up here, it will break back down on the downside. And this is how you identify trends and stuff. You have to wait for that pullback. So it's going to always do this. It's always going to make resistance, and it's always going to make supports. Okay, it's always going to go up, down, or up, down, up. Okay, so trend lines, all right, trend lines, support lines. Okay, I'm going to be explaining that too with the charts and everything. I'm going to be breaking down charts for y'all. So trend lines are uptrend. Okay, an uptrend is drawn, along the bottom of an easy identified support area. All right, and it's kind of is going up like that on an uptrend. Like, all right, so a downtrend. So a downtrend will be going down like this, right? So a downtrend is resistance. It has to go to the resistance, break that down, resistance, break back down, resistance, break back down, resistance, break back down. Okay, so same thing with the uptrend. It will have to go to the support, break back to resistance, support, break back up to resistance, support, break back down, then all the way back up to resistance one more time, and then shoot right back down. Okay, so this is how you identify the trend and what direction is going in. So there's three types of trends. You have an uptrend, okay, a downtrend, and you have a sideways trend. Okay, what we call consolidation. So the uptrend will make higher highs and higher lows. Okay, a downtrend will make lower lows and lower highs. Okay, and sideways will just be flat. It will just be going flat. It won't be really moving in any direction. You don't want to trade when it's going sideways. Never ever trade when it's going sideways. Why would you be trading when it's going sideways? Just find a different pair. Find a pair that's moving up. Find a pair that's moving down. Don't sit around and wait for that pair. You're procrastinating for what? Find a pair that's moving. Don't wait for that pair. You're just gonna be losing money, and you're thinking it's going up and it's down, and it's not doing nothing. It's really, you have to zoom out. You have to look at the 4-hour chart. I'm gonna be showing all y'all that 2-hour and the 15-minute and the 5-minute chart to actually see what price is really doing. And I'm gonna be giving y'all that too. But if it's going sideways, do not, I repeat, do not go trade. Get out of that trade. And wait for that trade. At least wait for that trade to go up or down. Don't, so you want to find a trend that's going up or moving down. Okay, so in an uptrend or a downtrend. Okay, so there are 3 types of channels, like trend channels. I don't really get into trend channels, but there's called ascending channel, which is it's like I said, it's higher highs. Ascending channel, basically it's 3 channels, which is the 3 trend channels, which is basically uptrend, downtrend, and sideways trend. So, another word for uptrend is called ascending channel. It's ascending. Okay, so it's going to create higher highs and higher lows. Okay, for the downtrend, it's called descending channel. Channel is going to create lower highs. Okay, lower highs and lower lows. Okay. And then you have the horizontal channel, which is the sideways channel, and it's just going to be going horizontal. And it's not going to be really doing nothing. Okay, so this is the ascending channel right here. Is going to create higher highs. So this high right here is higher than that high. This high right here is higher than that high, and it's going to create higher lows. This low is higher than this low. Okay, and this high is higher than that high. It's going to go back up. Okay, so it's going to create like higher highs and higher lows. You'll see this resistance higher than that resistance, and it will tell you that it's going up. Okay, same thing on the downtrend. It's going to create lower lows and lower highs. So you'll see like let me see if I can find a picture. Okay, so you'll see lower lows. There'll be like a low here, and there'll be another low here, and there'll be another low here, another low here. That it means it's going down in that direction. When you see lower lows in the market, it's going down. When you see higher highs form in the market, you have to understand patterns. You have to understand structure. So when you see higher highs and higher lows in the market, higher highs and higher lows in the market is going up. When you see lower lows, when you see the trend making lower lows and lower highs, is going down. Okay. And when you see the trend just parallel, when it's going horizontal, and it's not really going up or down, it simply means that price is at like a zero flat and it's not really doing nothing. It's indecisive during that time. Okay, and it'll consult. What it does is it consults. It'll be going sideways. It'll be like consolidating for about for a while, building up momentum sideways. It builds up a lot of momentum that way, going sideways. After this usually happens. You usually get a sideways trend after a uptrend, after a major or a major downtrend. Okay, then that's when a sideways trend comes around, because sellers and buyers are indecisive right now, and they don't know what they want to do yet. So it'll just go sideways until buyers and sellers decide, or the market, or the market, or the government, or the banks decide, which way they wanted to go, if they wanted to continue up or down. So you never want to trade when it's sideways. If you see any pairs that you trade that's going sideways, don't trade that pair. Go find another pair and get in that pair and make money off of that. All right, and then you can come back to that pair once it stops sideways, once it stops consolidating. Okay, so I just wanted to explain this to y'all a little more about identifying the trends, uptrend, downtrend, so y'all can be familiar with that when y'all make these trades and make sound judgments. Make a lot of money. Okay, so how to trade. Okay, so how to trade support and resistance levels. Okay, so trading a support and resistance level can be divided into 2 methods. Okay, you can wait for the bounce, or you can wait for the break. Okay, so what is the bounce? The bounce is the pullback. Okay, so we want to wait until the odds are in our favor. Okay, and we need some type of confirmation first that support or that resistance level will hold. So instead of simply buying or selling right off the bat, wait for it to bounce right back before entering. Okay, you have to wait for the pullback. Just okay, that is the bounce. That's called the bounce. That's the conservative way to trade. Okay, by doing this, you avoid mistakes. You avoid losing money. By doing this in a moment, cause price can be moving so fast, and so you could avoid a lot of those mistakes. Okay, if you just wait for price to pull back to the bounce. Okay, the fast way is to wait for price just to break through fast. And once price breaks through fast and slices through the support or resistance level like a knife slicing through a warm butter, that's when you get in. And that's the aggressive way to trade. When you see price just cut straight through. Okay, on the other hand, it's called the break. Okay, it's called the trading break. This is the aggressive way to trade. Okay, the way I just showed you before, the bounce was the conservative way to trade. So the aggressive way is to simply buy or sell whenever price passes through a support or resistance zone with ease. Okay, so aggressive way of trading it would be a break of a support or resistance. So as soon as you see a break out of support or resistance, you get right in. Okay, that's the aggressive way to trade. Okay, the conservative way to trade, that's called the break. By the way, that's also called the break. You wait for the break and then you get in. The bounce is, which also is called the constructive way, is to wait for price to make a pullback. Okay, price will always make a pullback. It will always make a pullback. Okay, you have to wait for price to make a pullback, then you get in. That's the conservative way. You avoid making mistakes. That way, you avoid saving money that way. So it's either two ways you can trade. You can trade the aggressive way or the conservative way. You can trade on the break or the bounce. Okay, so you wait for price to pull back to either a broken support or resistance level, and then you enter after the pullback. You enter after price pulls back. Okay, and then you wait for it to pull. You wait for it to pull back, and then you enter, because once it pulls back, it's going to drop back down. Or once it pulls back to the resistance, if it's pulling back up to the resistance, you wait for that pullback. Because it was already going down, but since it was going down, it's not going to just go down. It's going to gotta go back up. Once this is a conservative way. Me, I'm aggressive. So once I see it going down, I know it's going down, I'm getting in. You know, so it's like the conservative way is once you see price break, you wait for that pullback, and then it's going to continue back in that direction. But it's always going to pull back before continuing in that direction. So I want y'all to know that this is the aggressive way and the conservative way that I learned how to trade. I hope this helps. Conservative way of trading is to break the support and resistance. Wait for a break of a resistance. Wait for it to break here and resistance. From boom, break here and then back down, or boom here, right here. It'll go up, right? And then it'll break back down here. My bad. It'll go up and then it'll break back down here. It'll pull back down here before going back up into the opposite and the back up on the uptrend. Okay, same thing down with the downtrend. It'll break back down, then it'll pull back to the last resistance before going back down on the downtrend, back to breaking past the support. Okay, so that's how you identify how the trend is going. Okay, and which direction it's going. You wait for the break and you wait for the pullback. Okay, you wait for the bounce. All right, so that's all I really wanted to tell y'all in this video right here. The next video is going to probably be about what pairs I trade and what time I trade my pairs and stuff like that. I want to get that out the way next, and we'll come back to technical and allow analysts technical we'll go back to technical later. Okay, I want to show y'all what pairs I use, and I want to show y'all how to set your account up and how to set your demo account up and all that. So that's the next video. We'll come back to technical. I got y'all. So gang.